The Ethereum ETFs, they launched with 10-ish billion because ETH converted. They ended up having like 5 billion at one point when Ethereum was down under $2,000 a coin, right? So now it's back up and they're around 10, 11 billion in AUM, but still they're basically only a little bit positive where they were, despite owning way more Ethereum, despite taking in $3.5 billion in flows since launch. They're basically flat on assets because Ethereum has been a massively underperforming asset, which, yeah, I'll stop there, but yeah.
Yeah, until recently, Ethereum was very painful. Now it's outperforming slightly.
It's got momentum.
At least for now. Let's pray that moment. Yeah. But if we go back in time, I think you guys were on top of it and quite clear on the launch date and all those things. But then, I think it was September or October, we had the Cointelegraph internal. Like,
good times.
How was that? Like, did you check your phone and you were like, what the hell is happening? Or
so I saw it, and so there was two things. So the Cointelegraph intern tweet, I saw that and I was like, this is not true. Like immediately, I knew it wasn't true, and I was like, either they got hacked or somebody doesn't know what they're talking about. And then I was like, I did my work, and I think you can look in the actual like original tweet. Actually, it's been deleted, but like I commented because everyone was tagging me like, Jay Safe, Eric Balchunas, like, is this real? And within like 5-10 minutes, I was like, this is not real. It's not approved. So I was very confident in that. But then also, like, I kind of got in a little trouble for saying that because they were like, you shouldn't be like answering those questions. Like, you don't know. And I was like, no, I felt it was in my wheelhouse, and it was like in like the public interest to like, say that this is not true, and we're pretty confident it's not true. And fortunately, that ended up being right. But the other one, that was the SEC got hacked and they tweeted out the approval, and I fell for that one. I thought that actually happened because I was like, this is the official SEC account and all that stuff. But the Cointelegraph intern one was interesting to say the least. And like when you looked at, they did a story on like how it happened, and it's just like reciprocal of like people saying it's getting approved and then like somebody just believing that it was getting approved, and there was no real evidence of it.
It's just like the meme where someone starts saying something and then all of a sudden it comes out at the end completely different, or like it's funny. Anyways, the Bitcoin ETF is by far the most successful one, and I just had a show with Willy Woo, on-chain analyst for Swissblock, and he basically provided a document and an analysis that right now there's kind of no spot demand into Bitcoin, or at least it's primarily, if we look at the current price movements, it's primarily liquidations. But if we look at the inflow of the Bitcoin ETF over the past 1.5 months, I think it's still like 1.5 billion or so. Like who's buying now, and what's the current status of the Bitcoin ETF in general?
Yeah, I mean, if Willie's looking at the ETFs, I think there is spot demand buying for the ETFs, right? So I don't know the exact number over the last month. I'd have to look it up. I can if you want, but the one I'm looking at is like there was a huge pullback earlier this year in 2025, basically in the first quarter, but it went into April a little bit. There was like over 5 billion that came out of the Bitcoin ETFs. I think, and I wrote at the time, that I thought a lot of that had to do with the basis trade, which would be congruent with what Willie was saying. The demand wasn't from spot buying. It was from like derivatives and basis trade. And for your listeners who might not know, I'll just explain it really quickly. The basis trade is you sell the futures forward. So like a future expires every month, it rolls every month, and it sells at whatever price. And usually there's a slight premium on that. So it's selling at a little bit more expensive than what the cost is of spot Bitcoin. And what a lot of financial institutions, hedge funds, people like that, they'll sell that futures contract forward 1 month or 2 months, and then they'll just offset that by buying the spot Bitcoin ETF. That created a lot of demand from roughly around November when Trump got elected. That was a huge boon in demand for these ETFs, both Bitcoin and Ethereum. They both were huge parts of a basis trade through at least January into early February. And then money just poured out of all of them. $1 billion came out of the Ethereum ETFs, 5 point something billion came out of the Bitcoin ETFs. And that was through like April 20th, 420. And then since then, they've both like rocketed back up, right? So Ethereum, Bitcoin ETFs have taken in like almost 9.5 billion, I think, since then, over just the last couple of months. I mean, we're recording right now on June 20th. So It's been an insane whirlwind of money coming in. The flip side is the money coming to the Bitcoin ETFs. Obviously, some of that I'm sure is basis trade, but part of what happened with that basis trade, when you look at that yield on an annualized basis, back in like November, December, early January, that was double digit yields. Like virtually, it's not completely risk free because there's obviously settlement risk and what have you, but like almost risk free returns in the double digits. So that's why so many hedge funds and traders and institutions were pouring money into this. Even one of the endowments, everyone looked at like a pension that bought the ETFs, but they sold before the third quarter. I mean, before the end of the first quarter. They were involved in the basis trade almost certainly, right? So they were long 500 million of the ETF, but they were also short 500 million of the futures contracts. But that yield hasn't gone back really into the double digits for any sustained period of time. It's still like, I don't know what it is, but last I checked, like 8%. So the money that's poured in, that 9 point whatever billion into the ETFs, is largely not going because of that basis trade. It's not short term. It's not just picking up yield. It's actually buying of the Bitcoin ETFs. That's my personal view, at least the majority of it. So where is it coming from, you asked? Well, it's a long answer, but the short answer is I think a lot of it is advisors and long-term buy and hold investors on the ETF side, at least. Ethereum might be a little bit heavier. They've, like I said, they've also taken in, they lost $1 billion. They've taken in 1.3-ish, 1.4 since then. Mm-hmm. I think that is a little bit more heavy on the basis trade because the yield is a little bit higher on the Ethereum side.
I think back in those periods where the markets were basically just collapsing, kind of. I mean, March, April, Bitcoin hit like 75K. I think also the Nasdaq and all came down. During that period, pictures were shown of the futures short positions on Ethereum and Bitcoin going to all-time highs. And people were saying, yeah, so everybody needs to be short squeezed from here. But it's actually just, as you're saying, institutions doing the basis trade, if I'm correct.
Yeah, but that basis trade was unwound for the most part. So like if you look at the reason I say I can confidently say I don't think a ton of the demand for the spot Bitcoin ETFs is from that is because I can look at the open interest in those futures contracts and I can see it hasn't gone like through the roof. It peaked in like I think February. So it's still relatively high, but like it definitely peaked in February. So you can see that like despite all these assets coming in, they're not open, at least on the CME futures contracts. I mean, theoretically, they could be doing with over, exchanges that aren't, CFTC regulated. But for the most part, that's what a regulated institution is going to do. They're going to use the CME contract.
Yeah, that's also the picture that was shown on social media. And then the Web3 degens were saying, yeah, so we're going to go up from here because everybody is short, blah, blah, blah. But there's more underlying thesis than just plainly saying that. And that is basically bringing me to like the general macro portfolio that institutions are holding, or like the 401ks. Is there also a shift now when Trump got into the office that there's a larger portion being allocated into Bitcoin through the ETFs, and also a shift from US investors holding spot Bitcoin now transferring over to Bitcoin ETFs because they can get an LTV out of it? Do you see any shift in that perspective?
So I think it's happening. I have no way to quantify how much of that is happening. I know for a fact I've talked to people who've done it. They had a stack for many, many years, and they basically have taken some of it and put it in ETFs. Usually they'll use like multiple ETFs for this because if they have millions of dollars in Bitcoin. But they're doing it more for planning purposes. I don't know if they're necessarily doing it for the marginable reasons. And now also, I think if that was happening Ledin is a great provider. Strike is now doing this. So like if you have Bitcoin, you can definitely get loans on your Bitcoin, and the competition is growing. Rates are falling for doing that. I think I saw Strike was under 10% now. Let-ins over a little higher than that, but lower minimums. So like there's ways to do all this. So I don't know if like the being able to margin your Bitcoin ETF is like a reason that so many people are moving stuff over there. I think the people who did it or are doing it are more doing it for like planning purposes. It's a lot easier like to take something that's in the traditional financial rails and like put it into your system, especially if you have an advisor like I'm talking about. The advisors are probably some of the biggest buyers of this moving forward. it's just easier to put it in that ecosystem, whether it's like continued planning, like if you pass away or any sort of thing along those lines, or like figuring out how to pass it along to your heirs, like it. And if you just have like a financial plan with an advisor or somebody directing you, it's a lot easier to have it all under one umbrella. And also, if you're the advisor, it's been more beneficial to you because you could charge a fee for, you know, managing those assets that now fall under your umbrella where you charge a management fee. So all of those things I think are slightly contributing to it, but I really don't think there's like a ton of people who are like selling their Bitcoin and buying the ETF. I know it's happening. I know a bunch of people, but I don't know how much of it.